welcome to the CLS Quarterly Market Outlook for the second quarter of 2015. I'm your host, Robin Murray. On this edition of the Quarterly Market Outlook, we'll review what happened in the stock and bond markets and what worked and what didn't for CLS portfolios in the last quarter. We'll also give a brief refresher on the CLS investment themes. We'll take a look at the happenings in the international markets and finish with an in-depth look at technology and innovation. First, though, here's Chief Investment Officer Rusty Vanneman with a review of the quarter that was. Rusty?
Thanks, Robin. The second quarter was a modest one for domestic stocks. The Russell 3000 gained just 0.1%. This brings year-to-date growth to just under 2% and one-year growth to just over 7%. We saw slightly better performance by small-cap stocks against large caps for the quarter, a difference of about 0.1%. However, over the last 12 months, large caps have gained nearly 7.5%, almost 1% more than small caps. On the international side, including both developed and emerging markets, we saw growth of about 0.5% for the quarter. Developed markets still have the edge, having gained 5.5% year-to-date over emerging markets, which are just up over 2.5%. Meanwhile, bonds in the Barclays Capital Aggregate Index lost almost 2% in the second quarter. Despite that, the one-year number is still positive, up nearly 2%. Now let's talk about what worked for CLS in the second quarter. First, exposure in international markets, especially Europe and Japan, was a driver of performance. In fixed income, short maturity bonds and emerging market debt helped. As for what didn't work, energy companies and commodities were drags on performance for the second quarter. Even though there are investments that don't perform well in some quarters, we remain believers in globally balanced portfolios. We remain firmly committed to that investment philosophy moving forward.
Thank you, Rusty. We now move on to what's happening overseas. The Greek debt crisis has dominated the news coming from Europe, and our own chief investment strategist, Scott Kuby, recently returned from a trip to Europe, has more. Scott?
Thanks, Robin. While interesting political theater, Greece's debt situation caused far more worry than it was worth. It is now clear European negotiators hold almost all the cards. Defiant speeches, tense negotiations, and a referendum where the Greek people voted overwhelmingly against a previous European proposal proved to be nothing more than a sideshow. The European negotiators dictated terms that were more stringent than the terms rejected in the referendum, and the Greeks rolled over and approved the deal. Should Greece default, the impact will be smaller than a few years earlier.